Welcome back to this episode of the Jacob Podcast. This is your co-host Trey. In this episode, we interview Anji, who is a serial entrepreneur in crypto space. He's currently the co-founder of Finnt. Finnt is part of the YC 2022 batch. It's a DeFi app aiming to provide high-yield savings account for everyday people. We touched on different topics, including what does the crypto space look like back then versus now, what are some of the risks and opportunity in the DeFi space, and some of the recent events and trends in DeFi and crypto. So without further ado, let's dive in. All right, welcome, Anji. Very happy to have you on the pod.
Yeah, thank you, Trey. Happy to be here.
Yeah, so I would like to get to know about kind of how you get into the crypto space. I looked at your background. You started early 2018 when it was about toward the late of that 2017-18 crypto hype. Tell us a little about your experience back then. How was it like back then? And then how do you get into the space?
Yeah, of course. Yeah, so first actual experience with crypto was back in maybe 2013. I used to live in San Francisco. I had my first company called Dose. It was a marketplace for marketing. I met with a lot of folks that were super crazy about this thing called Bitcoin that I didn't know about yet. And say, yeah, it's the future of money and all that. So I got interested pretty early, but obviously didn't make the move early on because it's like the vision was super early and it was full of, I would say, maximalists on one side of the technology. And then you had also a lot of rumors around darknet, money and stuff like that. But it's really, until 2017 that I got interested into the actual application of what it means for different industries. And with my previous company, as I said, we were working in the marketing space where basically there is a lot of money, right? Like Google, Facebook, there are marketing advertising companies, and they do that by monetizing the data they have on users. But the way they do it is not transparent at all. And there's a lot of intermediaries, a lot of middlemen that are actually reselling this data, etc. So this is how I got interested and say, hey, how can we apply blockchain components to this to bring more transparency, more ownership also to user data and user privacy. And that's how we started on the project you're referring to called.
I see. So back then, I guess that over that hype and then it kind of died down. And then now there's a new kind of beginning of the new hype, right? So we're looking at history, we're looking at cycles. What has changed in the past couple of years? Like what's causing that initial bubble to pop in 2018? And then what bring up this new wave?
Yeah, I think we're seeing we saw multiple episodes like this. We are like in a new one. But even in 2013, when I got interested in it, I think Bitcoin reached 1,000 for the first time. And for the people who were there early on, it was already the all-time high, right? There's some people got in at $10. And so all these people come in, and then 1,000. And then you see 2016, 2017 is another mass adoption, new use case. Of course, Ethereum brought all the ICO craze and brought a lot of new use case, right? So you get this new adoption, and then you have Bitcoin reaching a new all-time high of about 20K. And then we are here, 2022, when we gone through another bull run, 2020 after COVID, basically to 21. And we see new use cases. But I think what is driving is, of course, retail adoption, institutions coming in with big money, but also it's talent. There's so many people, not only hardcore engineers, but product folks, marketing people, sales people, etc., that are coming to this industry and want to build something. So obviously, when you have so much smart people coming to build stuff, then it get a kind of a gold rush. So obviously now we have all these assets, the crypto assets that are listed. So you see the price hike. But I think each kind of bull run is also more smart people coming into that space. And that's what's also driving the price. That's my opinion.
Yeah, I think that totally makes sense. It's just more and more people coming to build out the ecosystem. And, as that develops, the bull run may fall back, but, the technology is there and that's just ready to kind of be developed more and more. But we understand that you're actually like in the DeFi space itself. So I'm kind of interested to get your thoughts on what is DeFi, and what does the future of DeFi look like, and also what people should be excited about DeFi.
Yeah, definitely. So we kind of like with my new company, Finnt, we're kind of in the middle. Like some people would call us like CDFI, right? Like where you have centralized component in the front end. Like we want people to connect with an email and a password, not with their wallet or with their private key. And leveraging some of the decentralized finance, the DeFi stuff to build things that are not possible today in the traditional finance world. Things that are not possible today in the traditional finance world. There's a lot of things, right? Like think about if you're living here in the US and you want to do a mortgage in another country. This is super hard to do. And sometimes it's not. So maybe you bring in a backpack, you go to that local bank in Africa or in Southeast Asia, and you try to get like a down payment done because you want to buy this house for when you retire there. Like having global accounts for multiple users that don't live in the same country or don't have relationship like parent to kid, like more complex relationship. This is also not possible. And in the world we live in, right, we are all having these remote lives, different path of lives, etc. And traditional finance has been built domestically by banks who understand very precise relationship. You have a salary, you are living in this country, you have kids. Okay, this is what type of product I will bring it to you. And I think DeFi is bringing all these opportunities to build things that were not possible with traditional money movements by bringing the programmable money, right? Like adding smart contracts to money. So now money is just more than just sending, receiving. It's now you can create conditions for what happened with that money. Like who is getting it for doing something specific. So you have all this, if this and that condition that you can bring into smart contract that was not possible before. And I think this is why it's super exciting, is to say, now that we have money that is not anymore just money, it's actual software.
Yeah,
we can build all these use cases that were not supported by traditional banks that thought like they built the traditional finance with a very domestic and very restricted use cases, as I mentioned. So that's why I'm personally excited, like building all the things that are not possible today.
Just attach onto that, like, do you feel like fiat currency, in some form could potentially develop into this kind of global infrastructure as well? And are you concerned at all about any kind of like regulations, maybe down the line?
So yeah, this is a question. I think for the fiat currency, like they have to reinvent themselves, and they're already, like, we know governments are already doing it, which is good. We already been pushed by governments in a good way to digitalize everything we do, right? Like paying our taxes, like using debit cards much more than like 50 years ago. Things like that. All these things have been pushed so that we use more of the digital processes to move money, to pay things, etc. Ultimately, this is going to be even more present in our lives with digital assets that are natively digital assets, because what governments try to do is to bring euro, dollar, who are not natively digital, into the digital world. And so what it makes is that you cannot move a bill, like a physical bill, to somewhere else in the world. So that's the big thing, right? Where we say, oh, when you pay someone, when you make a wire internationally, you make like a remittance transfer, it's actually compensation happening. It's not real, like the money is not moving from A to B. It's the bank in country A that is paying the other bank in country B so that the person there will receive the money. And so I think what has been done with, I think China is a good example of government pushing, for example, adoption of WeChat, right, of Alipay, of this type of solution, where China probably had 10 years ago, I don't know the numbers, but they had like huge amount of cash, right, in circulation, like people were using cash, their main way to pay for things. And then you get technology in, and now everybody there is using their mobile app to pay for everything, but ultimately create some of these issues. So I think fiat currencies how they are today are not they are not made for such programmable like transactions. And so that's why we see like in Europe and in the US, like kind of official stable coin that are pushed by government, which I think it's a good thing. So we'll see where it leads, where it gets there. But ultimately, your question about regulation is super important, because I think when we talk about money, it's as important as talking about like people lives, people security, people rights, and so on and so forth. So I don't believe in a world where we kind of remove borders. We have like Bitcoin being like the full decentralized money, and people store their net worth at home, and we don't use banks, we don't pay taxes and all this stuff. I don't think that's work, and I don't think that's something we should wish for, because it would be just like permanent and like wars and whatever, right? Governments are here to protect us, and I think it's like regulators, what they're trying to do is to find ways to incorporate these big innovations, this new type of money, these new digital assets into something that work for the government and for us, because ultimately I don't think governments are trying to rob us. I mean, there is tax stuff, etc., but ultimately I think they are trying to protect us. So and that's what I'm doing with my company, and what I think is the best approach is really to build products that are compliant, that are following the regulation, even though that means building maybe in a slower way, taking your time, paying more in attorney fees to understand all these things. But yeah, I just think regulation is so important in that innovation.
Yeah, I think it's it's exciting to see how things develop as well. It sounds like you kind of believe in more of a hybrid model. Yeah, and I think that's very reasonable.
It's also very important to do it the slow but the right way to shoot for long-term instead of for short-term gains. Because if you look at like the recent Luna incident, right? What happened to Luna and then Circle is still very good, very reliable, because they are very keen on the making sure they follow regulation, making sure they get everything right. So now when the market crumbles, they're still stay strong, right? So I guess let's take a step back, and many people will probably be wondering, why do we need decentralized finance, and how is it able to generate such, I guess, a higher return, higher APY, annual percentage yield, compared to the traditional financial infrastructure?
Yeah, no, that's a great point, and a great bridge to what happened 2 weeks ago with the Luna Terra ecosystem, which I think is just showing like everything is so early, right? That this type of thing, this type of black swan event will happen. A good thing that we see is that the crypto market didn't like crash so much. It was already like down, right, by several billion or even $1 trillion in market cap. But yeah, this event shows that when trying to build things too fast, I mean the founder, right, like we was very famous now for good and bad reasons, was very anti-regulation. And I think when you look at companies like Circle, Coinbase, FTX, Gemini, right, in the US, there are people, there are founders, there are entrepreneurs who are going to talk with the regulator. They are in Washington every other week, and they talk to them. So when you build an ecosystem where you're just trying to go against the current system, which has been working like this for centuries, then you don't understand probably how a market could collapse. And I think what happened with the whole Terra Luna thing, it was built into too much of the programmable or too much of the software spirit, which created this death spiral. Like it just crashed algorithmically, because this is what it was designed to crash this way. And if you want to build in something that take into consideration the market dynamics and protect your user, etc., then you build in a different way. And ultimately, of course, Terra ecosystem was very famous for bringing this like close to 20% yield. But when you analyze where the yield was coming from, you look at how much spread there was between the lenders and the borrowers. So you say, okay, how is the money is coming in? And then you realize, oh, it's just something not like the math is not working. So either you have another thing in place, or either it's just like a fake. I don't want to say Ponzi because it has some other implication, but yeah, it's like it's a fake system. It doesn't work, right? So when it collapses very, but that doesn't mean like yields from DeFi is dead. And I think there is a lot of other examples, a lot of maybe smaller protocols who are not growing, like they're not in the, I think Anchor was in the $15 billion, like in terms of asset there. If you look at companies like Finnt, it's super interesting. They're probably like few hundred millions. Maple Finance is also another one that are interested. When you have this similar approach, but then you have more barriers to get into it because you have to be whitelisted, you have to be an accredited investors, you have to respect some of these laws, right? And also there is actual use case. So like there is people that are lending the money, and then there are people that are using that money for something specific. Like in the case of Finnt, it's like emerging market financing, like startups and economy there, or institutions that are giving that money. And then this is a use case, right? Like the yield instead of being 20% is probably like 9, 6, 7%. So first it's more sustainable. And also now you start comparing to things that already exist. So if you look at your credit card APR, your credit card, if you don't pay it after a month, they charge you like 19, 20, 22%. Right. So now we can compare this type of yield product, or yield, like there is someone paying for that sometime. And then you can compare it to DeFi, and then you say, okay, yeah, there is use case where people are getting this money for a lot, right? Because it's expensive, because it's either long term, because it's super risky, etc., etc. And I think where DeFi is super interesting is that you're bringing this money in, and you're trying to find use case. So, for example, if we're thinking about the emerging market use case, you have smart contracts in place. You have, of course, the blockchain to make sure the default rate is public, and you know that. So you know exactly if a borrower is not repaying their loan, then you know like the risk of that pool that you were participating in is now higher. So the borrower now will need to pay higher rate, and so on and so forth. So I think the transparency that DeFi is bringing is very interesting. Now it has to find the economics that make it work in the real world. So that's why comparing with the credit card APR is I think interesting, more interesting than comparing it with, let's say, just the Bank of America saving product.
Savings account at 0.5%.
Yeah, not even.
Yeah, cool. Trey, do you have anything else to kind of add on?
I really like this comparison of, instead of looking at it as a savings account, looking at it as like a credit card. Bank has been doing this for years, right? Those institutes, those ones that don't have transparency, they've been doing this for years. And now, this type of opportunity just being opened up to a lot of people through decentralized finance.
Okay.
Yeah, makes sense. Maybe cool. Maybe we can kind of get more into the product that you're building. So we can talk about Finnt. Like, what is it about, and what kind of inspires you to build this product?
Yeah, sure. Yeah, Jeremy. Yeah. So one thing is funny, like you say Finnt. So I'm still figuring out like if it's Finnt or Finnt. I think there is like a debate. People like there's maybe like 20% of people will say Finnt. We say Finnt. I don't know. We'll see. Like we'll see. We'll just use whatever people use. But yeah, actually, so how it started. So we are two co-founders, right? I'm more like the product marketing guy, and my co-founder is a full stack engineer. But we have like the same background. We grew up in pretty similar conditions and stuff, and so we've been working together for like 15 years. And one thing that always came back was in our adult life, like now half of our lives we've been adult, we've been supporting our families who live in North Africa, right? Like Tunisia for my family, and Morocco for the family of my co-founder. And so when you send money through remittance, because that's the easiest way, like there is no neobank today that will allow you to do something as convenient as remittance. You send money and that's it. Like the people get cash in their hands and they start spending that cash there is no saving, there is no planning, there is no like fighting inflation, local inflation. So sometimes you get the money on the first of the month, and that money were 5% less at the end of the month, or 10% less, depending on where you send it. And sometimes like I have friends from Lebanon, sometimes it's like 50% less.
Wow.
So it's crazy, right? Like, and the reason why is obviously you have these non-very stable economies, right? Like that unfortunately that are struggling, and obviously the economy is struggling, government is struggling, and then of course the people locally, they are struggling. So we're thinking, okay, how can we do like something that will be similar to a kind of peer-to-peer banking network? Like if we think about it, like 10 years ago, like there were just licensed taxi drivers, and then again 15 years ago there was only licensed hotels, and now you have Airbnb and Uber. And now we think, okay, can we do something like where you will have like bankers, like network of bankers, and if we analyze families, there is always this person in a family that is acting like the banker. Oh yeah, you should definitely get this mortgage rate. Oh, you should definitely get this credit card. Or you should definitely like save this much and invest in this stock and this stock. And so we're starting to think, can we use that kind of relationship in the family, so that when we support our families abroad, we actually provide them some level of banking product, such as a saving account. And the issue we're thinking is like how we can build that global banking account. So we talk with banks, we talk with bank as a service provider. And what was like immediate realization was that this was possible using DeFi, or like the CDFI I was mentioning, and using wallets, because wallets natively are global. They are not domestic, right? So you can have a wallet today, have USDC on it, and technically it's everywhere. Same thing if you want to use a DeFi protocol, the yield you get there, or you pay, depending on which side you are, this yield is going to be the same, no matter if you are living in Africa, if you live in the US, if you live in France, and so on and so forth. So for us, it was very logical that to say, oh yeah, we want to build a global banking product, then let's use what is global by default. And so that's how it started. So currently we're still iterating. We have this MVP, which basically is again a global bank account, which we're not a bank, but like this is the idea. One of the components is the saving account, so that family that is cross-border located can save as a group. And then one person, that banker of the family, if you want, that relative, that kid abroad that is providing for his or her family, for example, will be able to save and then give an allowance like every week, every month, every trimester, whatever, to actually help the families locally. So that's kind of the background story. I think it's always super important to share how we navigated our way to what we're doing. And yeah, we're still far away from a final product, but it's super, super interesting to build in that space.
For sure. You mentioned that, obviously, trying to bring stability into the, currency a little bit. So is Finnt kind of got that right this time? So is Finnt,
depends.
yeah, is Finnt kind of major target is like emerging markets and like kind of developing nations? Is that what kind of market is?
Yeah, exactly. I think like what we're trying to build first for people we know, and like us being the first user of our own product. I think that's also super, like, that's why we started this new company. We really wanted to build something that would be useful for us, because before we built two companies together that we kind of build for other problems, right? Like, so, and this time we say, oh, now we old, we are like in our advanced 30s, we have kids, etc. We say, okay, let's have fun, but let's build something that we will use on an everyday basis. And as I said, yeah, our families being in those emerging markets, we say, yeah, we need to bring that solution to this market first. And when you look at the data, basically these corridors of sending money abroad, right? This remittance is most of the time emerging countries, or sometimes just like countries that have huge diaspora. I think China is one different corridor. It's a very, very different use case, because China as a whole is not an emerging country, emerging economy right now anymore. So I will exclude China from that perspective. But then you think about Latam, Africa, Southeast Asia. These are big corridors where people are based in Europe or in the US. They are sending remittance money, about 800 billion every year to these economies. But then again, yeah, when the cash settle locally, this cash is exposed to inflation. It's exposed also to risk, like security, just people getting $1,000 out of a cash outlet. In some places, it's not safe at all, especially if it's a grandmother getting the money there. So yeah, emerging markets is definitely the end user target, but the acquisition channel, like the people we're targeting, are actually located in the US and in Europe mostly.
It does feels like a lot of opportunities for decentralized finance is not just in the areas with more developed finance infrastructure, but a lot of places that globally doesn't have very developed or reliable government or financial infrastructure. And this provide a very important tool for people to better deal with their finance and their money.
Yeah, no, definitely. I think one thing the way I pitched to my investors, some of them at least, where like the vision is to say, for some technology, it's much faster to bring in a solution already packaged than actually rebuild a full infrastructure. So I think what we saw in Africa, for example, for like the phone network, right? Like most countries, most homes in Africa never got a landline. They all migrated directly to the mobile phone, the mobile network. And same thing for internet. Like most African people and homes who got a computer, which is not like the penetration rate there is still not, depending on which country, etc. There is some differences, but still you have a lot of penetration to do on like just like, let's say, a laptop. First, because people use their mobile phone also to go online, but also they never get like the desktop, has some developed countries like the US or the French kid, they will get like 12 years old, they will get this desktop and start gaming on it. And I think same thing for the bank, right? The number is to say about 22 billion people don't have a bank account. Probably 3 to 4 billion people in the world are what we call underbanked. So they have a bank account, they don't use it, the debit card is sitting in a drawer and stuff like that. So because the infrastructure to bank, like to build ATM, to bring in money from abroad, because those economies, they rely on the currency that is not stable and so on and so forth. So maybe, and that's part of our vision, is to say, maybe some of these people that were underbanked will never sit in front of a banker and sip a cup of coffee like you will go to Bank of America for your mortgage. They say, hey, or today, what's your loan today for my car or whatever. They will just like bank through a mobile app, and that mobile app can be basically anywhere in the world, right? So I think that's the vision also, is to bring in that layer of sophistication through DeFi, because DeFi again natively has this global component, and also because adoption locally might just mirror what happened with the landline and the mobile phone, for example, as I mentioned.
No, it makes a lot of sense. I really like bank. I was actually wondering, like in the DeFi world, like who's starting to do this. Now I know Finnt is definitely on it. Trying. I mean, I think you guys will do well. I mean, actually, while we're on that topic, you actually went through YC, so definitely think you guys will do well as well. So how was kind of the experience going through YC? Being part of the Winter 22 batch. What was the process like for you?
Yeah, no, it was amazing. I think we got lucky, I think, getting it right. There was like 17,000 companies applying. I'm sure many more, they were super smarter than us, better project. We were super early. We just have this like idea. Of course, we are repeat founders. We kind of have some idea of how to execute and a bit of network, but yeah, we were so happy to get into it. And it really, the process as a whole, right? Like when you apply, you get stressed, then you get your interview, you're stressed for all day until the partner calls you and say, hey, you're in. That was funny because the partner calls and say, hey, you are in, do you want to be in? I say, yeah, of course. Why would I change my mind? We did the interview this morning. So it was super, super great, like this whole process. And I think once we got inside, it's really what you make out of it. For me, there is a great framework that YC provide, right? That is very agnostic to what your company is doing, where your company is located. Of course, you will have a bit of an edge if you are doing maybe B2B and you are US based, because that's like a lot of the companies that are super, super successful are in this framework. But there is also a lot of B2C companies that are abroad that have been also very successful. But yeah, it's really the framework that YC provides you with the guidance, the resources, the network, and just the data. Like, I think you never get exposed to the data. Like you don't have like a spreadsheet where you can see, okay, if I do this, can I get successful? But the partners, the people you talk to, they have spreadsheet in their head and they know exactly, oh, if you are 6 months old company in this category, funded like this, then they know at least 3 or 4 companies that are exactly in the same either space or same setup, and they can tell you, okay, three are dead now because they didn't go this route, but this one is alive and it's a unicorn because they went this route. So I think that's kind of the big benefit or the big unfair advantage that YC provides is like having so much data on so many successful companies. And for us, it was just trying to refine our value proposition. We're still doing it, but it's just putting us like in that framework of thinking again, okay, what happens if we do this? What happens if we do that? And always thinking of hypothesis and some sort of like, if we go route A, what are the outcome that we can get? And I think that's the YC school, where they say, okay, run this hypothesis, do them, see where it leads. If it's successful, then go deeper in that route. If it doesn't change your route, do another thing and iterate from there. And that's why I think YC is putting so much focus on speed versus perfection, right? Like it's get the things done, get your product out, just try and see where it leads you, and then move fast, because otherwise you can stay 5 years doing something that nobody wants, and that you will just die with your nice idea.
Yeah, totally. Go ahead, Jeremy.
Oh, I was gonna say, I think, if we've spoken with one of my friends is also like a YC founder of like kind of the last year's batch. He was mentioning something essentially fairly similar as well, about how kind of YC just has this huge data set and can prevent you from, it's like a huge case study. There's some paths that they're just preventing you from going down. It's like, hey, this is a dead end. Like, don't go there.
Exactly.
Just out of curiosity, is there any kind of maybe like a single, maybe big, like kind of concrete action items that you found that that kind of impact you, where it's like, hey, you're gonna go do this, or like not do, like kind of YC process?
Yeah, I think it's very, I would say it's very basic, but we tend to forget it all the time. And I have this T-shirt, I have this mug, I'm trying to drink my coffee every day with. It says, build something people want. And I think that's a bit like, that's everything YC is about, right? Like when you're a founder, you tend to build something that you want. So sometimes it's good, right? Like 1 out of 100 times you have a good idea that applies to you, you are the market, etc., etc. Most of the time, even if your idea is good, or if the market you're going after is there, you will still build in a way that is not what the other people, like the actual consumer, the user of your app or your service, are going to want. And I think just keeping that in mind every day, like every single initiative you take, from a feature spec to running an interview for hiring someone, or just hiring a new partner, like a new vendor or whatever, always thinking about, okay, is that what our customer wants? And so it forces you to, of course, and if you don't have the answer, it means you didn't talk to your user enough. So now you're going to go back to them and talk to them until they tell you something that they really want, and not just that they say, oh, that would be cool, but really, okay, yeah, I want to pay for this because otherwise I'm going to die, or I'm going to whatever. And I think that's something that not enough companies are doing. And for sure, my very first company does. We ran it for 8 years, but we were not as successful as we wanted because we didn't have this in place. Like, we were building what we thought the market will be,
Right.
instead of building what the market was asking for. And we always discounted customer feedback and say, oh no, they don't understand, right? They say, oh, we know better. Let's build, and then they will come. It never happens. So I think, yeah, that the build thing people want, I think it's a great motto, and really what the best advice, yeah, they give.
And that was kind of verified just by, building a quick prototype, showing it to the customers, or, get some user traction and see, if that's actually what people, is that this kind of the model that was followed to kind of,
Yeah, exactly. It's like, just ship your first hypothesis and like do a sprint, right? Like you ship it, you have 1 month, you see where it goes. And it's very easy to know like it's working or not. So for example, for us, we're still in private beta. There are some components of what we're doing that are great, some other that nobody care. So it's interesting because some of the things that we thought would be super important are actually not the one that are being used as we want. So we are very far still from like a true product market fit where, like there is so much demand, like people get crazy, they refer it organically, etc. But at least we know it's part of the process. I think especially first time founder, they will build a product like a quick MVP, 1-2 months, they ship it. It doesn't work, then they're like, oh shit, it's over, we're done, right? While no, it's part of the process. You have this hypothesis, which is probably already, the one you select is already 1 out of 10 out of 20 that you thought will be good idea. So now you put it into life, you put it into the hand of the customer, and this is the best validation possible. So 1 out of 1 million time, your first iteration will be good, and you will be the next, the Facebook, the Airbnb. Even Airbnb was not the first iteration, but basically you got this great idea, you put it in the hand of customer, it work. But for us, yeah, we're still far away because of course we talk about how DeFi is new, how regulation impact us, a lot of like global consideration and stuff. But ultimately, it's just the first hypothesis. Now you have to run all this scenario and again, give it to the customer. So you get the feedback and you see if they like it. If they like it, you continue. If not, you iterate.
It definitely sounds like you learned a lot from the YC process, and there also a lot of learning as a serial entrepreneur. I'm sure you also heard a lot of different pieces of advices. Some could be conflicting to each other. So this one interesting question I would like to ask is, what are some of the bad advice you have heard in the past that people should not follow?
Yeah, no, I think like it's hard because we always get like advice that are never like, that will work for some people, but might not work for you. So it's like all about the context, right? Like someone will give you an advice because they just have like maybe 30 minutes, 20 minutes of context about your company, which is super hard. Like you have, as a founder, you have so many insights, you have so many angles, you have so many inputs that are in your brain. So you usually do a very poor job when you ask an advice first. You already do a very poor job at setting the situation and saying, okay, I'm between these two decisions because A, B, C, D. You always forget like the B and C parameters, which are most important for the person to give a good advice. But I would say like there is one advice that I think is heard a lot and that I don't think it worked well for me, and I don't think it worked well for many others. It's like the hire fast. I think the fire fast is good. I think that's super good. So, there is this phrase we say, hire fast, fire fast. So I think the fire fast is super important. As soon as you start thinking about this person, this person is not the right fit, then it's already too late. You should take all the steps so that this person is being fired. I don't like the word, but like you continue the journey of the company without that person, because that's usually that's usually never going to work, especially in the first days or the first month of the company. But the hire fast part sounds cool because you say, oh yeah, we will test people, right? But people are not product, they are not features. They cannot do A/B test with people, right? If we are not 0 and 1, we are a lot of sales and stuff. So yeah, I think I would say that's a bad advice. And I will recommend people to take their time when they are hiring, especially the first set of people. Take time to talk to them, work with them in a real environment before making a hiring decision.
Yeah, definitely. Yeah. So as we're reaching to the end of this discussion, I would like to hear your thoughts on the future of DeFi. So obviously there are a lot of pieces that are missing in the current infrastructure. If you can just snap your finger and make it happen in the future, what is the part that you wanted to improve or make it happen the most?
No, that's great. That's a great question that I don't have the full answer. There is definitely something that we are personally convinced, because this is what we're working on, is really the user experience, the front-end user experience, right? I see crypto, blockchain, everything else in the Web3, let's call it the big Web3 thing, as just a technology layer that nobody except the three of us and a bunch of like maybe 1 million other, right, listening to podcasts, being on Twitter, on Discord and Reddit, but basically 6.9 billion, maybe 7.2 billion, I don't know how many we are now, don't care about the technology layer. They don't care that your website is running on, like it's also in AWS, or that your database is SQL, or it's NoSQL, or that you are using PHP or whatever, right? What they care about is, does this service provide for my need, for my problem? And ultimately, that's everything that is missing right now. Like when I connect, MetaMask is great, right? It's a great experience. Most product that we have today in the crypto world, they have pretty good experience, but do they really serve a purpose? Like, do OpenSea have a pretty great interface, but what's the use case? Like trading NFT, okay, great, but like who is needing this? Are 7 billion people need this? I don't think so. So now it's like how we bring this user experience into solving real problem that people care about. And I think this is where it's super hard, because it has this needs to, like we talk about regulation a little bit, the compliance side, the global aspect, like how we can build global DeFi products that are compliant for different geos, etc. But hopefully we are going to move away, and I think we already moved away from 2013, for example, 2017, a lot of maximalists about the tech side, right? Like deep tech, how we build layers, layer one technology for blockchain, etc. Now, like more innovation into the use case and the application layer, so that we actually solve for the real problem of like banking people that don't have bank account, for example, right? And I think that's a matter of time. And if we can fast forward 3-5 years from now, hopefully Finnt and many other have solved for that.
Yeah, that totally makes sense. As people are building more infrastructure layer, the user experience part is often forgotten, but that's also very important for adopting more users. Once again, thank you so much for your insights, and thank you so much for joining us.
Yeah, thank you guys. It was great to talk to you today.
Yep.